All right, let's jump into things. 10:24 a.m. on the 2nd of April. So we are pretty much at Liberation Day. Well, technically for Australia it's tomorrow because obviously delay and everything like this. But 2nd of April, excuse me, is the Liberation Day. Which I was asking the mate sort of like, well, what is this sort of Liberation Day? Because obviously, it's the day of the tariffs kind of thing. Was the date of the tariffs, um, but I think that is exactly what it is. Like that's just been given a fancy name for it. I thought there was some other sort of meaning for it all, some American thing that I'd sort of possibly overlooked or something. But no, it doesn't seem to be the case. I think it's just Liberation Day from that. So liberated from not having tariffs or something to that effect. So anyway, whatever. The point is, it's here. I think this is going to sort of give us some a bit more clarity in that sort of with the markets a little bit. Um, the gold chart I have been using seems to have been replaced with Apple for some reason. So I don't know if that particular gold chart has just gone kaput and disappeared, which is a little bit frustrating if it has. But not to worry. I mean, it's just or if it's either that or trading views just having a moment. But anyway, look, we'll go back to this one. It's a little bit sloppier, but that's fine. We can still sort of work off this kind of thing as well and sort of have a look at how things are running. So, quick little sort of recap of where we're at. We had a little sort of trend that we've been seeing sort of since we shot off from 3,000, that big sort of chop consolidation about, geez, feels a while ago. It was only last week, I think it was it 27th? So, yeah, 5 days ago or so. Um, this was a big sort of up down kind of sort of move. I mean, like in a very tight little range, but I remember sort of posting at the time saying, look, the move is coming because this kind of price action where it's just outside, outside, boom, 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 excuse me, really just sort of wipes the book a little bit and then off it went. And, it's just been up, 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 up from here pretty much till obviously overnight where we saw this little move up and then bang. Actually, first it's kind of I think it depends how this the thing to know with some of these charts is that they change. They have different time zones, obviously. But so that'll sort of change when they actually close their 4 hour candles, when they close their daily candles. So you can actually get different readings on different charts depending on sort of what you're looking at. So it's always something to keep in mind. But as we can see here, first sort of bearish closing day with a nice little wick out the top here actually as well um, in this last leg of it all. So, we've got this sort of nice push up for, geez, it has been just such an incredible run. Like, it is just really, I mean, this whole year, but like these last couple of weeks particularly, I mean, look at this sort of move here. I mean, this is going back, so March, there's the start of March, kind of, well, actually, technically, start of March is, no, this is the start of March here. So, 1st of April yesterday, 10% in 1 month. It has been an absolute rip roar of a trade to the top side here. And yeah, we saw this little pullback reload, bang, move through again. Now, as I said, I'm not a Elliott wave kind of sort of person, so I mean, I'm sure people will be able to sort of like point out different things with these, but you know what I mean. You could have your first wave, and maybe this is second wave, and maybe you're going to see a third wave through there. I don't know. I know there's sort of five waves, and then with three wave corrections or something. So maybe this is your little ABC or something through part of it all. And I understand it's five waves inside the next wave kind of thing. But anyway, whatever. Point is that we haven't definitely seen the top just because we got a little wick out the top. That's great to sort of see because obviously we found a point where the market's actually sort of committed to a downside move. All these sort of ones through here, little wicks out the top, this strategic pullback, and then bang, exploded up through here even more. But there are a couple of things that we are sort of seeing here. Obviously, sort of this sort of overshoot of this little potential what we thought might have been a bit of a wedge coming out the top here. It's overshot that. This was the annoying thing about not having that um, other chart as well, because that was what I used for my sort of wider views, which were trying to think where was it? Maybe I think from here was where we had that big sort of daily channel. So drag that through here, was it? possibly something like this. Um, Let me get back down into something a bit smaller. This big blue line that we sort of drew through there just then, obviously shows that larger sort of channel with a bit of an overshoot. So both of this, if you were looking at this more medium term sort of potential wedge, even though it's sort of pulled off from this line here, so we can just update this a bit. It's on a higher tangent. Even more of a sort of bit of a wedge. It's just exploded out the top. So up around this sort of 3100. 31.49, I don't think he got to 50. No, yeah, 49 it got to, and then now it's pulled back. So, a couple of things here. Let's clean it up a little bit. So, whether you're trading this very, very long channel, overshoot, whether you're trading this little wedge, top line's still the same, and it's a bit of an overshoot. So, this could just be a bit of a cool off correction. You really kind of want to get back down underneath, as he said, depending on what you're trading and all that, around this sort of like, 30.70. I think this is going to be an area that's going to be of interest in that. So look, if this game could just be a little breather and then bang, shoot back up here. We'll see how this Liberation Day goes. I think you've probably got a little bit more cooling off. If you look at this just from a straight technical, I mean, RSI is pointing down. You've had a nice sort of drop down bearish day. It's stuffing around here a little bit. Look, you can see that there would be a little bit of sort of support into this area here, just along here. This is a little bit of a zone, as you can see. It was a bit of a sort of launch pad to sort of get it up to this top move over here. So let's make this just a little zone, start to build it up. So I think this a close underneath this area, close underneath 31.10. Jesus, you always got to keep track of these actual numbers. Close underneath 31.10, I think confirms that this will probably go down. Obviously, underneath the wick will be a little bit of a drop off in that. Coming down here, you've got this congestion area that we had around this, and this was a little bit of, I thought it was more sort of 30.50 was the breakout, but 30.70 was that little weekly open drop down, which just gave it this, I think it must have been this candle here. Which one was it? This was maybe this was it, yeah, that was the bottom candle here. So this was that little consolidation that we saw coming into the end of last week. This little zone through here. So these kind of levels, top sides of this may not sort of give you a full support, but it'll offer some sort of reaction. And as you can see the stepping stones as it sort of builds up through this area and where it might sort of, see some reaction as well. So I think sort of back down around this 30.70. So another $40 drop off, particularly if you get underneath 3100. So underneath 3100, let's put a little alert there. Interesting that it just didn't quite take out that wick. 3100, 30.70. 30.39. Anyway, let's just put an alert underneath both those wicks. So 30.70 would be your next sort of like target for this. So the idea is sort of coming down here. You may see some reaction around this level here. Maybe people were trying to short, and they want to get back out. So, you could see some reaction over here, but it's not a sort of super significant direction in the sense of, okay, you're moving up, you're looking for buyers. Where were the buyers at? So, you may be at people that are trying to short. They close their shorts. That'll give you some reaction. Doesn't mean that this is a level that people were keen to buy at. They were obviously keen to try and sort of see if they caught the top here. They got blown out. Look at these moves through here, kind of thing. So I'd expect some sort of reaction through here, but not a support. I think you're probably going to see a little bit more effort for buyers down at 30.70. Hence the little alert down at this line here as well. Going back on those sort of like wedges and all this kind of sort of stuff, that's also, depending on the speed that you come back into it, a little bit of a confluence of this latest little step away from that other zone over here. So we would expect, I would expect a little bit of a reaction, from this area here. And I think this is a fair, if I can ever click it, a fair little short-term target to sort of see what happens. Should you break under here, well then you're looking back down at this rising support, you're looking back down into this little chop zone over here around this 3000. So, a lot of work to be done, but as I said yesterday in the video, these things do have to cool off eventually. You know what I mean? It's been running just incredibly hot. And it just, you know what I mean? There's a lot of profit on the table. 10% in 1 month is just absolutely mammoth by uh, any asset that you're trading. Like it is absolutely huge, and gold is one of the largest markets as well. So the amount of money that that represents is just incredible. So, you know, this thing could hold this support here, and we could sort of find ourselves with a little bit of a range up over here like this. This is a little bit of a build up of this area. But as I said, I think the fact that you've broken this little trend line here, and this is what I say with these sort of trend lines, what you want to see is obviously it's respected it, respected it, respected it, respected it, respected it, and respected it, and then when it didn't, it went bang. That's the kind of move that you want to see when a directional trend line breaks, because it shows that the market was actually paying attention to it. If you have sort of moves where, like, you know, let's just another one for example, sort of if say that was your trend. Oh, I'm trying to find something here. This is your trend here for whatever reason. It doesn't actually line up with this one, but it dribbles out to the side. The market's not really looking at it. You'd want this to then just go and drop down. Obviously, it's not respecting that line, but the point is still the same. You want these things where you see the market actually go bang down. And now we're looking at that sort of smaller structure that I talk about every day. And we've got, I moved down, we found support around this sort of previous kind of little resistance area, previous support, moved up, found resistance. We're in this leg here now. This is the third leg, and this is the one that's going to tell us it's found support at this level, in which you've got a higher low. Pressure then goes back on to 31.20 and to see some sort of form of recovery. If you do, then you've got to look at the horizontals above it. You look at 31.27, you look at 31.37, these kind of levels to see if they want to sell us down. A little bit of a head and shoulders here. Alternatively, you get a lower low, and we see this sell down continue. And in that event, obviously, as I said, you look for these kind of moves through here, a little move like this, a little move like this kind of thing. And we look at this for a move back down towards, as I said, that first target 30.70. Expect probably a little bit more of a sustained effort once we get to here. So this may actually come up like this. But that's the path that you've got to look for. But obviously, stepping stones wise, you've got to get down underneath that wick. You've got to see that they're confirming that they're actually going to continue to sell this thing down, take profit, and then we can say, okay, boom, where's the next likely level? If you're a buyer, where would you go? Okay, look, I had it. There's a good support here, support here, support here. Where would you strategically retreat to? You probably wouldn't necessarily. I mean, as I said, you probably see a reaction, 30.86, but you can see that for whatever reason, people that, and we're talking people that value, like actually move the market collectively here, is where they were starting to buy. This is a fairly straight move through 31.10 to 30.85. So you could probably expect something similar on the way back down. But I think if that alert comes on, then that's pretty much the direction they'll be looking for as a move down. Move this just so we can actually see the chart. As nice as it looks, I'll get rid of it all. But yeah, that's pretty much the course of action that I would sort of be looking for with gold. As I said, you've got to consider both sides of it, back up above sort of 31.20, and then, okay, you're looking up at these levels here, potentially a retest of the underside of this. It does, to me, doesn't sort of strike me like, you know, when they break these sort of, you know, rising trends, I think you do need to honor that. Generally, price needs to be punished a little bit. It doesn't mean that it's the very top, but it could sort of also be that, you know, it does need to cool off and come down a little bit to sort of reload and recharge. Bigger potential sort of moves, and this is, I was actually looking at this on a different chart. This is what sort of sparked my original sort of thought or comment on the different time frames, is that, you know, this could be the starting of a very big head and shoulders. This is very early days call. It's not really anything based on anything other than we've had one high, two highs, and we're coming back off here. Look, should this sort of happen, you come back down here, you see a bounce, and then you see that move there. So if you see a move off 3,000 to 3,050 and then back down through 3,000, then we've got a very top, big top. And we've got, that would confirm overthrow of this rising support. something like this would have a very sort of devastating effect on price. In this scenario, again, not saying that this is it because I do a lot of this sort of maybe this stuff could happen. That's pretty much where your measured move would be. 28.57, which seems to be in line with the level that we've sort of marked out previously. And you've got to look at these things again. Let's update this because we've gone a little bit higher yet again. So it's not low time frame. I don't know why it's on that one. This is up. Boom. This retracement here, this little Fibonacci that I've just made green, should this play out? It's quite a sort of bold statement while we're a scratch from the very highs. But again, look, play these things out. Should this happen, that's only 50% retracement of the move we've seen this year, which is massive in terms of dollar amounts. I mean, you're looking at 9% drop off, $290 from the highs. Look, these things can happen, and as I sort of covered the other day, I don't have it on this chart now, do I? The size of these pullbacks that we have seen through the 1,000, through the 2,000, through, well, we haven't seen it on the 3,000, the 1,000 and the 2,000, have been around that sort of 10% mark. I think 12% once it went through, first time it went through 1,000, 10% once it went through 2,000. So, a 9% pullback, albeit $290 thing, could be something to see. I don't know. Let's just see. I mean, that's kind of very, very far away. Let's deal with these lower levels and this kind of stuff first. But should that sort of start to take effect, it could be something that we look at in, say, a month or so's time and sort of see how these things sort of play out. All right, so flip along. We got the other metal. We got silver. So silver, yeah, is breaking back down right into that zone that we had marked out. So this is where I'm sort of really interested to see what happens, because this is where we said, look, you know what? It was in this zone here. It's tested once, tested twice. If this goes through here now, then I think we're going to see a little bit more of a move down, because we've seen it sort of test it, break to the downside, and obviously it held it here. Nice big bounce up yesterday, unable to get back out of that range. Broke down here again, retest the underside. Actually, very reluctantly sort of came through here, but then eventually gave up and just bang, went down. So again, this is why I sort of say you look at not necessarily where the sellers work. So if we drag this across, this is a good example of what I was just talking about with gold a second ago, that you've got these areas here. Oops, let's just pinpoint. So you've got these areas through here where you've got sellers, whatever. You can see that that's obviously a level in which they've sort of moved it up, came down here. People were trying to short through this area, close shorts, buys, whatever, bang, blew up through here. As it was coming back down through this area, it was an area in which obviously you could see they managed to close above it, so it had some sort of significance there, tried to hold it a little bit here, but it's not really the buy point. You know what I mean? Like the buyers stepped in down here and they shot it back up. Buyers have held this line here, pushed it back up a little bit. So this is what I was saying, sort of like, as it comes back down, the top ends of these ranges are levels where you can expect some sort of action, but it's not the sort of same as the actual support in that structure, if that makes sense. Which is important mainly just for me, and if anybody takes anything from it, good on them. But this is one thing I've always sort of thought, because you see people going, oh, here's your support, and like they make them green, and then here's your resistance, and then this is, you know what I mean? Like each to their own with the way that they trade. I trade a lot sort of in and out, and short time frames and this kind of stuff. So I'm looking for little points where we're going to see reactions, and to be able to differentiate the difference between where we're going to see a small reaction, where we're going to see a sustained reaction, is important. But what we're sort of seeing here is at the moment we've hit this little target. It's rolling over. You close underneath 33.50. So give it a couple of cents down here. Whoops, copy price. 33.50 here. So breaking supports and a leg down. I think that's a fair sort of way to go. Yes, we've got that little wick around this area. We can see, so maybe taking out the wick would probably be a little bit better, 45. I mean, we're talking 5 points here. And then we're sort of starting to move down. Same sort of little structure that I was just talking about a second ago there. You can see the same here. This is a resistance area. It wasn't a support area. This is a resistance area, so we can expect to see a reaction through this area so that you can put your first price target at 33.29. But I would say your support more likely is going to come in back down at the bottom end here. So around 32.80. So, you know, it's still 60 cents or so off. So 80 cents off. So they're the two levels that I've been looking for underneath. So around here to see a reaction. A second move down through here means we go down here. And we undo this move. And this is the kind of thing that makes me think that sort of like, you know, these metals, although they can run independent, very much run independently, of course, of each other, we could see these things sort of all sort of start to cool off together a little bit. I have sort of said this, if we have a look on that other chart, this is a better outlook of it, it's a bit cleaner, but we do have this big wedge. I'll put it on the daily, you can see it a bit better here. Up into the top of this wedge, so 42, yeah, so pretty much as I said on the other one, you can make it to 40, like underneath the actual wick. So this is on a daily time frame. Obviously here I've got the alert set at 33.42. This then takes it out of this wedge. And when you're out of a wedge, well, you know, you're looking down at, you know, 33 is probably your first little swing low. So this is a support area. You can expect a bit of a reaction through here. Because obviously this is where the buyers were holding it. But this would be your double level. So this would be your your double break confirmation. So you see your reaction here, you bounce, your second effort will sort of get you through here. And then you're looking down at these other levels through here. Yeah. And through here. This hasn't broken the wedge yet, but to me it's a negative divergence into the top of it. So just need that little push to sort of get down. Where are we at? 33.66 now, 20 points down, close underneath there. I think this could be the one that sort of sort of sees a little bit more of a drop off. Measured move on something like this as well. From this point here. From the break level, say it breaks here. Right back down into this little buy zone down over here. So back down at around $31 or so. Show this just over the side here, and as you can see, this is where the market had a little wick down here, a little support area. So should this break, confirmation, a second move underneath 32.80. Again, you could see some reaction here at 32, round number. We've seen the market supported up over here, but a completion of the measured move of this would be back down at 31. So certainly be looking for the break underneath these wicks to sort of see if this is going to be triggered a move. All right, move along. We've got DXY. So this thing has been choppy, to say the least. But this is the thing I've always said, and I haven't always, but particularly through this period, I've said a lot that DXY does this stuff. It looks like he's rolling over, rolling over, rolling over. Out of nowhere, bang, it's back into life. What I said yesterday is if we could get above this wick, above 30 minutes, it always takes a second just to remember what I'm trading. Once we get above 104.40, I reckon we're going to take out the highs. We didn't take out 104.40. We got to 104.37. So this is an area in which I wanted to see some reaction. We saw it come back down here. What is an interesting takeaway here is look at this support through this zone here. They allowed it through, found support at the 61%, bounced back up. All of a sudden, they're giving it another go. The pressure, so the buyers sort of allowed it through. They shook it out. This is what it does, as I said. They sort of will say, let's not clear this up. I won't get rid of it because it was worthwhile having. So let's put it just on current. What they've done here is they've allowed it to sort of come right down, sucked out a lot of people. Look, if you looked at the yields, they were sort of coming in, falling off a cliff, whatever. They were coming down. They held their support. That's what I covered yesterday. They held the support. 61%, very deep pullback. I told you DXY is not shy of some deep pullbacks, particularly in squeeze motions. I've covered it numerous times through here. It's sprung back into life. It's got this little bit of a sort of, wasn't really so much of a sort of support down here, but it's definitely a resistance level, which it held and held and held. It's closed through the top side here. This will be a crucial sort of period today. You can see that sort of buyers were down here. They've stepped up their pressure. They've reclaimed this 104 level. This is the kind of line in the sand now because this obviously was heavy support. I was surprised that they let it go chop through so easily. I said this yesterday. But as we saw, 61% bang on Monday or whenever it was. Monday, 61% bang sprung back in. 104.20 is the next sort of battle line. As you can see, it was support a number of times. It's acting as resistance. You close up above here, you close at 103, 104.30s. You take out that 104.40, I think you're going to new highs in this bounce move. The original target was 104.75. We got very close to it, but obviously we dropped right back down, 61%. In fact, we dropped back down. This kind of changes things. The fact that it's consolidated here and moves up, I think sort of changes the targets. I think we have the potential to move a little bit higher should this break, to keep this in mind. And I've said this as well, that sort of like, you know what I mean? Look, again, this thing could just be, it's only sideways. It could definitely come back down to the bottom over here, considering both sides. What I'm saying is the scenario in which it breaks 104.40, I think we take out the highs. If we take out the highs here, I think you need to honor almost this sort of like measured move and a sort of little bit of a push up towards 105. This overshoot target that I had, of course, was up around here. So we can still pop this over here a little bit more as a retest of this larger level to sort of see how these things sort of play out. It's still only 50% of March's drop down. So this is March down over here. Correlation, one sort of side note as well is that correlations have been exceptionally out this year. So it's been a very tough read on things because you haven't had the sort of the nice sort of trade setups that we've sort of seen over the last year, 2 years or so, like where if this is moving up, that's moving down, and you know things go out of correlation just a little bit, but then they snap back into it. A lot of these markets are running very independently of each other. We're seeing gold and equities both drop down together. We're seeing gold and gold and US dollar, DXY, drop down together. We're seeing periods of US dollar and gold move in sync. Well, not, not so much through here, but you know what I mean. The normal sort of things where we're seeing, copper going up, Aussie going up. You know, they're all running independently of each other a little bit at the moment. But what we probably could take away is that as we saw how strong March was, 10% move on 10% move on gold. Well, we saw a 4% drop off through the start of March, and then DXY has just gone sideways while gold has continued to sort of continue to move up. So there is some sort of correlation here. Sell off here, gold moves up, sideways here, gold's still moving up. Once sort of gold does start to cool off, we could see the flows come back into DXY. It goes against kind of what I just said with the correlations being out, but it goes to show that sort of like obviously it did move it. They're not selling US dollar. They're happy to sort of at least hold it at this level. So there are a level of, as you can see, buyers, buyers, buyers. People are buying it through this zone. So if they're keen to buy it here, and then you've got the sellers of gold, that flow from the gold has to come somewhere. They're already buying DXY here. This could give DXY a bit of a squeeze up. Look, I don't think it's going to automatically. I think there's too much of a sort of case against it on a fundamental basis. But at least in medium-term trade, I'm sort of saying that this should it break out of these levels of this zone here and get another leg, could see another move up before we see move down. Ultimately, I think it's going to 101, price target down over here. That'll be sort of confirmed through 103. But I've said a couple of times, I'm open to the idea of them, oh my God, it looks like it's rolling over, jam it up another couple of levels. I think there's some easier money to be made sort of with a little bit of medium term US dollar. If this thing was going to break down, I think it kind of almost would have done it already. We saw how fast it moved when gold was ripping. Gold has continued to rip and US dollar's holding. The buyers have moved from here, as you can see clearly here, and they're moving up their assault. So 103.80 or 103.75 is where the buyers are sitting now. As you can see, they've moved from here up to here. What you want to see now is can they take out the sellers that are at this zone here? So this is a big sort of range area here. So I think this we can make this a breakout box actually. That's what I'm kind of looking for. What measured move will this give us? This isn't a true range because we've just got a high low. We've got obviously a couple of touches down the bottom here, but we haven't sort of multi-confirmed this level up over here. I'm just sort of doing this to potentially see. And I sort of think that, yeah, should this thing break out, I mean, 104 will be the early indicator, but certainly if it takes out 104.80, you're going to see in the next leg, 105.20 to 105.50 is probably where I'd expect it to kind of move before we see potentially a bit more of a selling action. So something to here and then back down over here. That's what I'm open to the idea of. And as I said, if this is probably predicated on gold selling off. If we see gold sell off, this is the kind of trade that I'll be looking for. All right, move along. All right, last thing, just with that, it's all negated underneath, as I said. If we see these buyers aren't here, then we look back down to 103.24. Underneath that, then we look down to 101. But till we get this breakdown here, too many things on the chart, can't click it. Till we get this break of 103 here, this is what I'm looking for potentially for a bit of a move up, structural move up to 105s. Yeah, probably above 105. I think it's got the ability to catch a lot of the market off guard. If you have a look at US 10 yields as well, it held support, but it's broken through. So, you know, it's holding up and actually moving for higher, even as yields are coming down. So that's interesting. But yeah, it's I think underneath this level over here, 410. I don't really trade a great deal, but whoops. It seems to be where the market's held it a lot recently. A little bit of a flag breaking down here, close that gap. Let's see if it can recover. If this thing sort of moves back up, maybe. There we go. Here's a low, here's a low. Look, if this thing, the confidence level on this is not massive, but it is something to have a little look at. Might as well mark it in. Should this rally from this point here, it would give this last push down as a negative divergence. And move back up here. So let's move this alert here. ounce back into range. This is obviously at a point where it's, it's right on 20. It's touching here. It needs a big oomph push up to keep this sort of buy pressure moving up. That will sort of give it a negative divergence, which could bring it back up into this range around that sort of 330s, 334 range. Just something to keep in mind. All right, and Aussie, Jay, this one held beautifully. And this was the thing that I was talking about, the buy zone down at 62.30s and that. I did say I was looking for a little bit of an extra push down to this bottom area here. We had RBA yesterday. I think the RBA actually, I think, sort of played it very well, and I think it sort of probably maybe caught a couple of people off guard because a lot of the commentary that I saw prior to it all were expecting, like, I mean, everybody was expecting a hold, that's fine. Um, but a lot of the commentary was that they were expecting a sort of dovish statement afterwards. So the fact that they held was whatever. You know what I mean? It jumped around a little bit as it moved, as it sort of happened, but not a great deal. If you have a look on the 1 hour, you can see this was it here. So this is the move here, jumped around 2 o'clock. So this candle here, up, down, whatever, a couple of points either side, pretty much unfazed by it. And then you had the press conference and it sort of chugged up a little bit because I think that overall the press conference came in a little bit more, well, she to me sounded more hawkish than a lot of people have been giving her credit for. I think they were sort of saying that, oh, it's got to be this sort of dovish kind of sort of sounding thing, and we're going to see sort of Aussie sort of dribble back down. I would have loved it. I told you I wanted to buy at 62, but we saw it sort of grind up. And this is another thing that I say is running a little bit independent of other things because obviously we're seeing DXY. So US dollar on a broad sense is, they're trying to buy that thing up a little bit. Aussie also appreciated. So Aussie's sort of running while the market is selling US dollars. So if they should sell US dollar, you'd probably see it take off a little bit. Now it's back up into an area which obviously was a very sort of heavy sort of support area. So I was saying that 80 I thought was going to hold, and for the most part it played its part. It came back up here, and now we're up into 90s. 90s is another level that I sort of say. So 60s, 90s, and 20s I always find great levels for Aussie. As you can see, 20s they held down over here. There we go in the 60s, resistances, supports. And now we're up into 90s, and we're finding that little bit of resistance there as well. So they're just reoccurring levels that I like to sort of trade off. We can see that this full move under here has been undone, and we're seeing a little bit of a sell down now. Well, we've just ticked over 11 o'clock. So we'll see how this sort of plays out. Again, look, it would have been nice to have actually loaded at these levels down here. I did say I thought it was going to consolidate. It did consolidate for the part, and then sort of, what's this, at about 1 o'clock, it sort of shot up. So we got up from 50 up to, so 30-point move. Not too bad there. I don't think this is going to break through straight away. What I am looking at, though, is the fact that sort of, you got this falling resistance. It is testing out the top side. It has tested out the top side over here. We've got 2 closes outside. This is on the 1 hour. Let's put it on a 4 hour at least. A 4 hour close outside here will be good. But realistically, up above here, above 63.25, a close up and above there will be a recovery move, in my opinion. So RBA, I'm ticking you up a little bit because they held rates, they didn't cut rates, and they sounded hawkish. US dollar, even though US dollar's moving up, so I'm going to say that's still a negative for it. And then China's actually sort of ripping up a little bit as well, so I'm going to say that's a negative for it. So yeah, you got the RBA working for you, but remember, this is the biggest driver, that's your medium driver. RBA is still that little tail end mover. So it means it's not dead, but it means it's not all guns blazing, let's go to the moon. How I'm going to apply that is to look for some support on any sort of pullback, and then maybe try and buy some pullbacks. But should we see US dollar, as I said, potentially squeeze higher, I think that's going to eventually catch up with Aussie, and then we're going to see the pressure come back on it. So look, I'll still be sort of looking for a consolidation around the zone here, because you can see this is a little box, broke out, retesting. We're finding some selling here now at the moment. It's pushing back, albeit just a couple of points. It is finding some sort of resistance here. So I think any sort of potential sort of move back down towards these sort of mid 62s, then I'll probably start to sort of scale in some positions. But I think I just don't want to buy this thing right now, thinking, hey, we're breaking out when we've got a couple of things working against us. As I said, the one, RBA is working for us, but US dollar looks like it could sort of squeeze up a little bit. I think those metals coming off is going to sort of come on to Aussie a little bit there as well. Should you break back up into this range, then obviously you're looking at sort of 63.20 as your sort of short-term target, and then break above that, away you go. But yeah, outside this little channel will be a big positive. So up, down, bang, move through there. All right, just quickly as well, just that gold silver ratio out the top side of the range. So this was another one that I sort of put on X the other day, this negative divergence. We could see buyers moving up, and I said, look, if we see a move like this, like consolidating, you see the buyers moving this sweep action, there's a good chance that we're going up here and we're going to 95. This is the first time we've tried to test out the top side a number of times here, hasn't been able to do it. Now it's closed out here. This is on 4 hour, quite significantly out the top side here. We've got the initial breakout candle, got sold down like every single one of these ones did. But the buyers, as you can see, are moving in this action here. So I don't use these things, but just to emphasize the point. Probably better if I could find it. Yeah. Last one, this one here. Bang. Moving up like this. Buyers are here, they've moved up here, they've moved over here. They're going to keep pushing, and I would say that there's a good chance that we go up towards this 95 area. This is a measured move of this channel that we've been in for 3 weeks. It's also the previous highs from back in September 22. I think the fact that it's had a multiple closes out the top over here looks pretty good for it. RSI is not looking super for this kind of point here. Let's have a look on the daily. Daily, you can see that, look, they've really, as it came back down here, came right back down. Buying pressure was strong. It's got room to move. Certainly if it takes out this candle. Move towards 95. And you got to think, how's this going to sort of affect? How do you, like, it's all very well that this is breaking out, but you don't trade gold silver ratio. I don't think I mean, you could probably trade everything anywhere, but I don't. Use it as a barometer. And, obviously, as this thing's moving up, gold's going to be the more preferred of the two. But if they're selling off the whole market, well, silver's going to get bashed, basically. And that's going to move us down to those lower sort of price targets. See how that one plays out. All right, flip along, getting pretty long on this one. As I said, I'm still looking down, lower down here. It held a little bit here. It's dribbling a little bit, maybe a quick spike down to 488. I'm still waiting. I still think that we've got some room to sort of come back down over here. RSI is just not quite ready to cool off. Maybe if it can sort of hold this area, make itself a little zone. But again, then you'd need to be looking above 514 to really sort of say, hey, look, okay, we're going to come back up and challenge those highs at 525. I still think that we've got some downside to come with copper here. So nothing really new to report on that for today. Taking out 5, just call 5 the round number, and then you're looking at 488. Is that around that, just over that 61% pullback zone. All right, and following then with China, as we saw, this thing sort of came down out the bottom here. Now he's faked and pushed back up. This is another thing that gives me pause with Aussie. I think that this potentially has the ability to flip and move up here as well. So let's put a little alert. Here. Continuation higher should we get this alert going off. RSI is cooled a little bit, so it does have room to sort of support it if it wants. I think it is sort of running on fumes, but I'm looking up towards 730. Completion of this big body candle coming down here, and then we start to see the sell down here. But again, this makes me sort of have pause on Aussie while we see one weakening potentially a little bit here. It is in a little bit of a sort of a range. We saw a little bit of a shakeout, very strong sort of push back into this area over here as well. So again, it just makes you think that sort of US dollar may have a little bit more um, against the other currencies as well, seeing the pushback over here. Alternatively, this thing sort of comes back down here. We find ourselves in a range. If you find yourself in a range at this point, then I think you're back to this kind of thing. Where's that little breakout box gone? This kind of thing here. I think a close outside here is what will sort of confirm it. We'll see how that one goes. All right, so I think that's it for the charts. Bit of a longer one today, actually. So that was yesterday. Let's have a look. Overnight, oh, of course, yes. So we had jolts coming a little bit weak, and also ISM manufacturing. We did see US dollar sell off on this data, but as expected, it's weaker data. You probably could have expected this. Oops, that's going off. Excuse me. Yeah, so it's coming a little bit weaker. Nothing sort of super shocking in that, but obviously it's a tick in that sort of weaker sort of camp for the US dollar. But all things considered, still with that, it has actually bought it up. And this, again, just it's these little things that I look for that if you've got fundamentals, you're not going to sort of like shape the market on jolts. You're not going to shape the market on ISM. But there are ticks that go in certain columns. And if you can put crosses or ticks or whatever you want to call it in the negative side column, yet the market still buys it, that makes me think that there's obviously something else driving it, and they're probably going to take it a little bit higher. So if you do get some positive data on top of that, that means that you're going to see these things move a little bit harder, and I think that's important. We got ADP tonight, actually through the day, nothing. We got nothing sort of note. ADP tonight, medium mover and that's looking like a little bit of a tick up. If you see a positive number here, again, ADP not as big. It's sort of get overshadowed by the NFP, of course, but it does make you think, okay, look, if this does come in positive, we could see US dollar sort of fire up a little bit more. Trump speaking tomorrow, so that must be his Liberation Day's kind of speech, 7 a.m. Nice and early for us. I don't know what time that works out for you. It must be late for them. I think 9 or 10 hours difference or something, so late at night. And then sort of, unemployment claims, ISM's okay, we'll get that kind of stuff tomorrow. But so nothing really through Asia today, and then we're looking at ADP for tonight. That's it from me.